What up, Hyperchange? Welcome to another episode. We've got some epic Tesla content in the works. Got Tesla Daily host Rob Maurer here. Good friend of mine, friend of the show. Second best Tesla podcaster on YouTube. Welcome.
That's my joke, man. I took that for your birthday, the birthday tweet. Can we throw that up in the
Mine wasn't a joke, though.
Cold start. I'm out.
All right, so...
Thank you for having me, Gal.
Yes.
I am a friend of the show, and I appreciate the work that you do.
Thank you. I appreciate your work, too. No, seriously, Rob is... I feel like we were joking about this earlier, like... I relate to him so much because we had like these tiny podcasts, or I had my YouTube show, Rob was audio only, and we had like no one was really watching, and we were the only people bullish on Tesla talking about it like 2 years ago. And now it's turning this whole economy of like 1 million people doing it. Tesla's the talk of the town.
We should talk about that for a second because I think you deserve a lot of credit because back in college you were investing in Tesla in your college like simulation game in like what, 2000.
Not some real capital, but yeah.
Okay, real capital. In like what year was that? 2012.
2012.
Yeah.
Yeah. Pre-first short squeeze. Right. 20s. In the 20s per share.
Yeah.
Yeah, right?
So like
crazy.
Yeah.
50
2 years ago we were talking about Tesla, but you were looking at Tesla, 8 years ago now, which is pretty crazy. So credit there.
Dude, appreciate it.
I invested in 2013, so you beat me in. So well
damn.
done. Well done.
Damn, that's crazy. But OG nonetheless.
Yes.
So, damn, with that said, I feel like my first question is a little underwhelming, but how are you feeling about the capital raise?
I was a little bit taken aback. I think we all were not really expecting it after the comments on the call. But the best time to raise money is when you don't need to raise money, and a lot of the circumstances changed since the call. The stock was up 32% since earnings report. So when situations change, you need to reevaluate. I think Tesla did that, and I think they're taking advantage of a good opportunity to raise capital at this time. And the way that I look at it is, it increases the probability of Tesla existing in the future for very little cost. 1.7% dilution. If that's going to get Tesla through, not that there's necessarily going to be a recession or anything like that, but if there were, and if the recession were to be worse than 2008, something like that, like the more capital Tesla has in their in the bank, the better the odds of them getting through that period of time. So, yeah, maybe it wasn't expected, and maybe they don't actually need the capital, but they need to exist, and this increases the chance of that happening.
And what did you think about the posturing on the conference call of, we're not going to raise capital, we don't need to raise capital, why would we raise capital? That seems like a dumb question, yet we're going to raise capital.
Yeah. I think
2 weeks later.
Right. Because Elon specifically said it doesn't make sense. But again, circumstances changed, and I think they reevaluated and wisely decided to take that opportunity. So again, the best time to raise is when you don't need to. So if you're communicating that you need to raise money, then the stock price is going to be lower, and you're not going to get as good of a deal. So I'm okay with that.
Right? It's almost like Tesla finally cracked the code on the market, which is like, say you don't need to raise money, then the stock is going even crazier, and then you finally raise because everyone thinks you didn't need to raise. And like what you're saying, like you raise when nobody wants, or like you don't need to.
Right.
But
and I don't think they're like gaming it in that way of like, oh, we're going to tell them specifically that we don't want to raise capital, and then like 2 weeks later we're going to. I think they probably just reevaluated and had further conversations and decided that it made sense.
Right. And then it's like the amount the stock went up. It was already at like 580 when they did the call, and they said they didn't want to raise, and it was already like, whoa, what's happening? And then it's like now it's at 900. It's just
right.
It's so crazy. So how are you feeling about this whole stock move? I know you're personally a big investor, option stock. Have you been holding on to your position? How are you thinking about what's been happening?
The way that I view it, there's a lot of question of if this is a bubble or if this is sort of, the new tier of pricing for Tesla. And I definitely fall in the latter camp. Back in 2014, Tesla's revenue was $3.2 billion for the year. In 2020, they're going to do more than $32 billion. So they've 10x'd revenue in that period of time. The stock in 2014 was $280 per share. So we're up, 4x from that, 3x from that. That's not crazy when revenue's gone up 10x over that same period of time. So your price to sales ratio comes down over time as you grow. Like that makes sense, but that's not a crazy amount of increase in the stock price when we look back over that period of time. For it to happen in the course of 2 months is a bit surprising, of course, 2 to 9 months, wherever your starting point is, but the value to me is definitely justified based on all the things that we're seeing from Tesla, the improving profitability, the demand being intact, the lack of competition, the underselling and over-delivering, kind of what you talked about with Tesla starting to figure that whole game out a little bit. So I think they've demonstrated progress on all of those areas, and people are now looking to the future again for Tesla, whereas it had been such a short-term view for so long there for a couple of years.
And it seems like it's one of those kind of backfill into valuation situations. Like that's what I think happens a lot in the stock market. Like it went from like 25 to 200 all of a sudden. Everyone's so pumped in like 6 month time, and it's like, whoa, they were not worth 200 a share for that. They took them 5 years to actually build that business of the expectations set in, and like I always look at the intrinsic values going like this, but the stock values like so.
Right.
I don't know, but I'm a big believer that this move has taken us by surprise because it's been so big. But when you actually look at the fundamentals, like I'm kind of like, okay, I just think this is a huge re-rating of Tesla. And I'm always trying to go back and forth of like, I've been saying like, okay, it's about 5 times price sales. Like now we're looking at Tesla, $150, $160 billion company, low 30 billion in sales, maybe like a 5x 2020 price sales ratio. So typically for a car company that's trading at like 0.2, 0.5x, or it's going down because all these auto companies are going down. It seems like their market cap is leaching into Tesla. But I wonder like, and I keep saying like, oh, it's a computers on wheels company, Apple, these bigger tech companies, that's the sort of normalized price sales ratio we should be looking at for Tesla, which if you adjust for this growth rate, 5x makes so much sense. They're growing like 2 or 3 times as fast as Apple, maybe 2 or 3x the price sales ratio. So how do you, are you feeling comfortable with a 4 to 5 price sales ratio for Tesla right now? Or do you think they should be more in that auto camp of like 1x?
No, definitely not the auto camp. I mean, there are so many problems the current automakers have that comparing Tesla's valuation to them is just, it's an effort in futility. I think like it doesn't make any sense to do that. There's no growth left for them. They have to make this increasingly difficult transition into the next era of transportation, which is going to be electric and autonomous. So for them to have to do that in the face of a company that's already essentially made that transition and has been doing that for a decade now, and basically we're now just starting to see the legitimate efforts from the other automakers. It's not a good situation for them to be in, and they're strapped with all their legacy investment in factories and pensions, debt. Like there are a lot of financial headwinds for them, and we've been seeing them react to that by cutting dividends and things like that. Like Nissan's cut their dividend, Renault's cut their dividend, Daimler's cut their dividend. Like pretty much everyone, it seems to be, they're reducing that, and that's pretty much the only reason to own those stocks is for the dividend. So when that goes away, it's like, I'm not going to buy these stocks for growth. So
yeah, and let's dive into that a little because you put out some excellent content on the financial situation of like I think Mercedes and some of these other companies, and as well as like BMW's like electrification timeline. So what are your thoughts about when we were talking earlier off camera? You're like this, okay? I'm like, bro, have you seen how bad Ford and Mercedes are doing their financials? And you're like, yeah, that's with them doing everything in the short term to make these numbers look as good as they possibly can.
Right.
Like short term thinking for the financials and managing for that.
If you've ever worked for like a big company, you understand that there's a lot of gamesmanship to make things look as good as they possibly can, and that sort of echoes throughout the organization at each level. Like each person is trying to like make things look as good as possible to their boss, and then their boss is taking the aggregate of all of those things that their employees made look as good as possible, and then they're taking the bad stuff out of that and making that stuff look as good as possible to their manager, who's in turn doing the same thing every layer on up. And then you have management doing the same thing to investors, making everything look as good as possible. And they're strongly incentivized to do that when we get to the financial results because that's what shareholders are looking for. They're not looking for how you're going to be doing in 10 years. They're looking for like, all right, what's my dividend going to be this quarter?
Yeah.
What's your outlook this quarter? How are you guys positioned? And that short-term thinking is it's incredibly difficult to fight back against that when your business and your investor base is sort of built that way. Tesla's fortunate to have long-term investors because they've been not profitable for so long that their investor set has expected that. It's more difficult to make the switch from value to growth because your investor set is a value investor set and they want those dividends and they're trying to get those short-term returns. So it's just like a different group. To switch over is so hard. And you have to do it both for investors and for management.
Yeah, and it seems like a lot of these share prices, I think for oil companies as well, and just a lot of companies that like my grandma, shout out to Grammy, that she owns, like I'm like, your only thing that's propping up these companies, the financials are deteriorating, is this dividend. That's the only thing propping it up. The second they announce they're cutting their dividend, like the core value of the company is just about to get crushed. And so I think there's sort of like a lagging thing there. But additionally, I think another huge difference is not only in the way their investors are, but the management team. Like so many of these managers are just incentivized by salaries. Like Elon Musk is like the longest tenured US auto CEO, maybe of any auto CEO of a major automaker for like over a decade. And he literally takes all of his salary in stock, this radical stock compensation plan. Like he is incentivized and really wants to make the stock price go up. And like all these other managers are probably making 10 or 15 million a year, just not caring about the actual future.
Right.
So I think that is, you know,
the salary is a great point, and then even further than that, they're incentivized based on like their annual earnings numbers, which your earnings are going to be better if you're making fewer investments into the future. That's just a natural outcome. And there are some things like, you know, return on invested capital that they try to integrate to alleviate some of that, and they'll have these like long-term compensation plans which end up only being like 3 years, which is not a long enough time horizon to make some of these investments and actually start getting a return on them in some cases. Like think about the supercharger network. That's a great example. Like another automaker is not going to do that because that would hurt the ability of those managers to be able to, and we're talking like C-suite people here, that would hurt their ability to earn their performance packages. So they're never going to invest in something like that because there's not a capital return on that. Where you see that come through is your customers are going to buy more vehicles. But if you're not even profitable on electric vehicles, like that doesn't do anything for you in that time horizon. And a lot of these people are thinking, you know, 5 years maximum, because that's like the span that they have left in terms of their career probably. So why would they care about 10 years from now if it's not going to help me earn more money today?
Yep. Incentives are misaligned.
Absolutely.
And then I'm jumping because we're like a little short on time, but I have so much we want to cover. This next thing. So you have an interview with Pierre Ferragu, I think, from New Street Research.
Yeah, so I'm in New York to do a few different interviews. So I've got a couple analysts and then Ihor Duzanuski, the short interest guy. So I'm really excited to get those out.
Yeah, I'm pumped to watch him. So I don't know if that'll be out. You guys should all, Rob, usually he's doing podcasts, but now you've started doing YouTube videos, which is amazing. I've been bugging him to do it forever. And so amazing to see Tesla Daily Roast. You guys should subscribe to his YouTube channel because I know you're going to upload this interview and about with Pierre Ferragu specifically. And you were saying something that you just framed perfectly is it may take a long time for Tesla to monetize their autonomous opportunity, but the semi-autonomous opportunity for them to capture more software margins on their vehicles as they roll out these features like self-driving on city streets is a key piece of the reason why their gross margin can go up, and tying it back into like, why is the price sales ratio make sense so much higher than every other automaker? Because this is a totally different business. They're pricing in way more software into the company, and we're starting to see that as they raise FSD prices. So, and I think this is a huge misconception for investors of Tesla. They're like, oh, the autonomy piece, it either, you know, makes them $1 trillion like the ARC model, or it doesn't matter at all. And I'm like, no, they don't even need to hit the autonomous piece. They just need to keep making these incremental improvements, get a higher attachment rate for full self-driving. And we're going to see these gross margins go up like every quarter starting from now. Like this is going to impact the financials today, the whole self-driving technology. So how do you think about that piece of the thesis, and you know, how does that tie into your view?
Yeah, that's you framed it really well as well. I think the incremental margin provided by that software option is significant today. I think the take rate, I think they last addressed it was like 25%, 20%, something like that on full self-driving. There are no other automakers that have a $7,000 software option that are getting, I don't even think any other automakers have a software option like that. And then to get a 20% take rate on it, that just falls right through to the bottom line. So as the semi-autonomous capability continues to improve, and this year we expect to see, you know, Navigate on autopilot transition from being sort of highway only to being adaptable to city environments, which is sort of what Elon views as full self-driving feature complete. So it has the capability of doing the entire trip for you. It's not necessarily going to do that with any, you know, great consistency, but it's still a nice feature to have as an owner of a vehicle. Like that, it's pretty incredible to have access to that, and there's a lot of value add for that.
Your customer happiness will go up because of that feature.
Absolutely. So when more people see more value out of that feature set as it continues to evolve over time, the take rate on that feature is going to increase, or Tesla's going to be able to charge a higher price and keep the take rate the same. So either way, it's going to be margin incremental. And what Tesla can do with that, they can either capture higher gross margins for the overall enterprise, and that can it just falls right to the bottom line. Or what they can do is they can take that incremental margin that they're recovering from the full self-driving feature set, and they can use that to lower the price on their other offerings. So that's more what I expect Tesla to actually do, because I think over time, how Elon views it is just to maximize volume. He's not trying to maximize margin by any extent. I think he's just going to hold the company at 25% and use any incremental margin that they have anywhere to funnel that into lowering the total cost of ownership of the vehicle, whether that's through insurance, whether that's through lowering the base price, whether, whatever else they can do. That's what they're going to do, because that allows you access to more customers, and that allows you to grow volume. And that's the mission. Grow volume, accelerate the transition.
And this is getting a little off topic, but this is one of my someone asked what's your bear thesis of Tesla? Where does it go wrong? And to me, it goes wrong of Elon not wanting to make money. That's the biggest red flag in my potential of all the reasons I'm oh, what would Tesla do wrong? Elon's just screw it. We'll sell these cars at a 5% margin because we want everyone to have them. So do you ever think about that as an investor? Because this is hitting on the nail on the head of ARC's model, which also a bunch of people have asking for oh, Tesla's going to extend to 40% gross margin, sort of assuming.
I don't think that will ever happen.
The trend has been they actually keep their gross margin steady around this 20-25% range, lower price, lower access to the technology. Does that reach an inflection point with maybe not the Model 3, but the Model 2 $25,000 car where they will eventually, maybe it's the robo-taxi network that really takes those margins to the next level. But do you ever, how do you balance that view of Tesla of oh, it's a social good, we love the mission, but it's, there's $160 billion of value priced in, when there's $1 trillion of value priced in, we need to be generating a huge return of cash flow.
Right. A couple of points that I want to make on that. And first, we'll start with sort of the second point you made, which was the 40% gross margin thing. I don't think Tesla will ever do that unless they are production constrained to the point where they sort of have to do that, if that makes sense, where lowering the price on whatever service or vehicle that they're selling does not drive any incremental demand because they simply cannot produce anything more, or they cannot offer more autonomous miles, anything like that, because they're literally just producing as much as they can. And that's historically pretty much what we have seen from Tesla. There's been some up and down, obviously, but if you look largely and zoom out over the last 10 years, Tesla has been production constrained.
Yeah.
So depending on how production constrained they are versus the level of demand, you might see some periods of time where the gross margin does spike a little bit as Tesla sort of optimizes the cash flow around their production constraint. But over time, I expect them to pretty much just hold to that 25% gross margin and put that back into expanding volume wherever possible. So I think that's the first piece on margin. You might see those temporary periods of time. The second piece on Elon in terms of, is he properly aligned with growing the value of the organization, or is he just trying to put as many electric vehicles into the market? I used to have worries about that. That was one of my main concerns when I first invested in Tesla is all right, is this more altruistic, or is there potential for real returns here as a business? And I think a lot of people have had that question. The new Elon Musk compensation plan is very well incentivized for Elon to grow shareholder value. If it doesn't grow, even if that's because of dilution, because of too many capital raises or things like that, he doesn't get paid. His compensation grants him stock options at around $350 per share. Even if the market cap's $1 trillion, but the dilution is such that the share price is still $350 per share, he doesn't make any money. Nothing. He needs to make money for SpaceX. So that's your alignment right there.
Yeah.
That's all you need to know.
And he said Mars is extremely expensive, and I want to accumulate assets on Earth. And I'm hoping Elon is bought into this theory that I have of if you actually want to have a sustainable enterprise, it does need to produce a profit.
And he has mentioned that before. That's the only fair criticism, not the only fair criticism, but one of the fair criticisms of Tesla has been that it has not been a profitable business. And he's specifically mentioned that.
Yeah,
so,
and that's why I love Elon, because he's so humble. And even I was bro, slow down. We've been growing like crazy, investing in all this new tech. There are no fair criticisms. No, there are, but I actually don't really care if Tesla's super profitable. I don't super profitable. And I think it's a fair point, but does it tell the whole story? And is Tesla's unprofitability in their earlier years justified? Yes, totally.
Right.
And they did this G check this year and went, cash flow positive. And that's kind of been my big takeaway is we proved the products work. That's been years ago. But now did we prove this could be a financially viable product and the business model works? That's what happened in 2019. That's what is the execution that's boosting the intrinsic value of the stock. So I'm curious, to dive into like nerd out a little bit on the cash flow situation. How do you feel about like we did 6 billion, we have 6.3 billion in cash. We just raised 2 billion. Maybe we have like 8.5 billion. Is Tesla? We know Q1 will probably be a loss in cash, but what do you think they do with the cash the core business produces? Is there just a huge wave of capex? We know they upped that capex guidance. Is it bringing battery cell production in house, which is going to be a $3 billion expenditure they're going to talk about in April, which is what they're reserving for? Or how do you think about the cash flow and heading into 2020?
To be honest, like it's not something I think about all that often because I expect Tesla to be able to manage through it, and I don't expect the capital needs to be so extreme that Tesla can't get the capital that they need. And I think this capital raise and every capital raise they've done to this point in time has proven that. And yeah, there might be some dilution at times, but Tesla's also proven a great track record of return on their invested capital. So it's not something that I don't even really care about it. Like if cash flow positive, that's great. But if it's not because they're investing more in CapEx, like that's better.
Love it. Honestly, let's move on. Amazing. Yeah. So solar glass roof, this is to me one of the biggest things. Oh, Tesla's an auto company. Why are they valued at this wrong? No, they're an energy company. Mm-hmm. They're going to crush $2 billion a year in energy revenue this year, according to my estimates. That should be, multi-billion, almost $10 billion of enterprise value. So solar glass roof, the more and more I'm thinking about this is such a game changer of just every single roof that gets built. There's 4 million or 5 million new roofs a year, $33,000 a roof. This is like a tens of billion dollar opportunity. Yeah, North America, tens of billions a year of opportunity. Like this could justify the entire market cap of Tesla. Because if you think about it, I just think like as humans, this whole like, let's put solar panels on a roof and then like retrofit them to the roof. It looks hideous. It's super expensive, super inefficient. Like it just wasn't like that click to make that technology go mainstream. But now it's like, wait, we have the sun, this huge fusion reactor, pushing out all this energy. We're just wasting it, yet we're starved for energy. It's like a no-brainer. Mm-hmm. And I think Tesla, it's taken them so long to do this, but it's also going to be so hard for anyone else to replicate this product. And I think this, to me, maybe it's a 2021 story, but the more I'm thinking long-term about like, why am I really not selling my shares at 900 or whatever? Because I'm like, this is not just about dominating the pure electric vehicle space, forget about autonomy. This is about really the solar and the battery piece coming to light as sort of a new growth driver.
Yeah. I mean, I 100% agree with everything you just said. The point that I would add is that even at $900 per share, you can easily make a circumstance that is very reasonable for Tesla to be valued at this level just on automotive. Not factoring in energy storage, not factoring in solar, not factoring in any sort of autonomous network.
That's what ARK's saying, right?
Right. And it's just all upside, all these other categories. But yeah, I mean, I totally agree. Like fundamentally, why not? And this is Elon's whole case. Like, do you want a dumb roof or do you want a smart roof? Like, why not have your roof create energy if it's going to be roughly the same cost after factoring in that energy? It just makes sense to do it. And we're still in the early stages of the technology, which people don't appreciate. There's never been a good solar roof product before. This is like version 3 over the last like couple of years. What's version 10 going to be like in 5-10 years?
Yep.
And people just don't think about that. They're like, oh, this product sucks today. But like, okay, the Model S was great back in 2012, but like it's way, 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 way better today. The same thing is going to happen with the energy slate.
So I want to wrap it up on Tesla. I feel like we got to move rapid fire because I want to get to SpaceX and stuff. But what gets you most excited about Tesla right now? Is it that level of like, okay, they've executed and things look amazing right now, but what people don't get is the pace of innovation of those product lines.
Absolutely.
It's also picking up speed. What gets you pumped about this 2020, 2021 sort of next phase?
I mean, I'm always pumped about Tesla. Like it's just, that's like a steady line. It's just a steady line. If I speak specifically to this year, I'm excited that Tesla has seemingly figured out the Wall Street game and they're starting to play it a little bit, which it doesn't really matter unless you're raising capital, which Tesla has, and they, may continue to do. Then the high stock price matters, and it obviously helps, express confidence in the company for customers, for employees, things like that. But since they have figured that out, I think that's going to provide stability to the company, which is also something that Wall Street likes. So just that outlook of the stock, I think that's exciting, but fundamentally for the business, like Tesla, I think the execution, they're firing on all cylinders. That's, an outdated expression at this point. We probably need a new one for batteries, but they're executing. And we see that with Model Y. We see that with, Gigafactory Shanghai. We see that with the early stages of progress with Gigafactory Berlin. And I'm excited to see what they continue to execute on.
So Battery Investor Day.
Yeah.
What do you think? What's your opinion on that? What's coming?
Yeah, I'm hyped. I mean, they're definitely going to walk through some of the acquisitions with like Maxwell and Hybar and how that plays into their battery manufacturing process and just the batteries in general. And
right, Tesla's not said shit about any of this, and meanwhile, like we're all making I'm making a gazillion YouTube videos, and so is everyone else about what Tesla's going to announce, and it's like, yeah, it's just hilarious to me because they're finally actually going to say it, and it's so like I went from being like I got it nailed 99%, I know exactly, and then I like saw this prismatic CATL China news, and I was like, wow.
Yeah, which I'm
ready to be so wrong on Battery Day. Yeah. Like,
I'm excited. What I hope to see is I hope to see them walk through sort of the path to like 2 terawatt hours, as Elon has referred to.
So, and what do you think about the capital commitment?
Yeah,
and that's what's the financial
so,
lens of this.
And one of my conversations this week, we kind of talked about this with the analysts, and I'll save that as like a bit of a teaser. But strategically, you need to consider how much it makes sense to talk about those future plans versus explaining sort of what you've accomplished already. So I'm curious to see where that balance falls for Battery Investor Day. Personally, as someone that's interested in the company, I would love for them to talk as much as possible about those future plans, but it may not make a lot of sense for them to talk about all that stuff at that time. So that's what I'm most curious to find out, I think.
And you had an amazing question that you put on save for the last earnings call. I'm not sure if it got asked directly.
It was number 6. It got bumped in favor of a question asking for more retail questions.
So meta.
Which was fine, but
so
it was just kind of ironic.
But it was about whether Tesla could grow at 50% or not and continue that growth rate. So how do you feel about your personal estimates and guessing of will Tesla be able to continue to grow at around 50%? I'm even saying 40 because that's still awesome. 40 to 50% CAGR for maybe the next three to 5 years.
So I think it's like 42% gets us to 20 million from our base now by 2030.
20 million vehicles produced.
20 million vehicles.
Wow. So in my fully charged pitch, I had 6 million vehicles in 2030.
And that's $1 trillion.
And that was $1 trillion.
Is that just auto?
It was 90 billion of energy revenue as well.
Got it. Yeah, but I mean, that's why I'm like, yeah, $900 is cool and stuff, and $150 billion market cap is cool. But that's why I'm saying you can easily make a case for that to be the valuation of the company based purely on pretty conservative automotive assumptions. People look at the other automakers and they assume like Tesla's going to get the same horrible operating margin that they do, not factoring in the ability of Tesla to leverage software, not factoring in the dealership networks. Like there's just so many differences between the companies, not factoring in like pensions, like advertising, so many differences that people are just like, nah, whatever. It's an auto company.
Yeah, I love it. The fact that people don't get it is like, I love it because I'm like, I talk to so many smart people. I'm like, you still don't get it. Yes,
that's what's weird.
Like we
right?
like that Isn't means that we have so much more to go and so many more people to convince that like you're killing it and you're smart and you're forward thinking and you appreciate climate change and you're still not convinced Tesla's going to take over the world. Like amazing. This is what's adding. Like this is the upside. Like SpaceX. Elon's the GOAT. Amazing. We're pumped on Tesla. SpaceX.
Yeah.
What the like? How mind fucked were you when they were like, we're gonna spin out Starlink?
I'm gonna have to edit this to put it on my podcast feed, Gally.
Sorry, bro. That's all right. We're NSFW here at Hyperchange.
Yeah, that's true. What's your actual question though?
Starlink. You must have been caught by surprise by that spin out. And
I
what
was,
do you think about what Elon's doing there?
Yeah, Elon has consistently said like they're not going to IPO until until they're doing like Mars trips like regularly, which is that's a long time horizon, especially back when he said a couple years back. So I think it's surprising. To me, it hints at they must need some sort of capital because why not keep it private if you have the choice? We've seen Elon, try to take Tesla private, and that seems to be probably the preferred method of operation for good reason. It's much simpler. So if you don't need capital, it doesn't make a lot of sense to do it. So I guess the biggest question for me is like, what are they going to use that capital for? Why do they need to go public with the Starlink piece of it? And why not just keep that private? But in terms of like the opportunity to invest, definitely interested in the company. Like I haven't done, much research on it yet. But it's exciting. And the technology is obviously, you can't really replicate that unless you have your own, rocket company that's able to land rockets and stuff, which no one else can really do. So
all right, rapid fire. Yeah. What do you think the valuation of Starlink would be?
I don't know.
If IPO with no revenue.
I don't know.
Not even a number.
I haven't
Zero
done enough
punting.
yet. Can I return that question back at you?
Yeah, I think they're gonna. I thought it was 3 to 5 billion.
That's it.
But then
That
I think
seems
they're going to
low.
do around 10 billion and try and raise 2 billion.
Okay.
And it's as much about just like separating the entities as it is about raising capital.
Well, because SpaceX's valuation is like 34 billion right now.
Yep.
I feel like it's a bigger percent.
Yeah, I don't know. SpaceX is so fascinating because I think there's a huge lag on like I was talking about Snapchat, like the lag of like that attention and then monetizing that attention, like the lag of financials catching up to the monetization potential of the technology, the reusable rocket technology. It's like, oh, we're just spinning out a $10 billion company, no problem. Starlink, soon to be $100 billion internet giant. That's just one tiny thing on the back of our reusable rocket tech. Like that's why I'm like SpaceX deserves a ridiculous premium on that launch revenue.
Yeah.
But anyway, so you're interested in SpaceX?
Yes.
Bullish. Okay.
Yes.
Tesla licensing out skateboard and batteries.
Yeah. So
How bullish are you on this?
I am
Intel inside of every other EV.
I'm extremely negative on this idea.
Wow.
Extremely.
Wow.
And somebody asked, one of the analysts asked on, I think maybe the Q3 call, and Elon just sort of paused. And it was a long pause, maybe like 5 seconds, which is a long time.
But then he was like, yeah.
And he was like, yeah, we could do that. It makes sense with the mission.
It was Adam Jonas, who's also in the room when they're also raising capital.
True.
Because Morgan Stanley is the joint lead on their,
And
on their
his
secondary offering. And he also asked that on the Fiat call. And the Fiat CEO was like, yeah, we're trying to license Tesla skateboard. So it's like,
And
I feel like that's going on in the banking discussions.
Yeah.
They're like, oh, well, you didn't see this analyst report of this model with Tesla licensing out their tech that we
Right.
could release if they say they're going to do it, which is why you should buy now.
And Adam Jonas, in his notes, he does discuss that as an upside scenario for Tesla if they can become like the supplier for electric vehicles for the industry. That's like one of his. I don't know if that's like in his $1,200 price target or whatever, but that's one of his bullish cases.
What about
Like
autonomy
upside
tech?
risks. Potentially, I haven't thought quite as much about that. I'm thinking more like powertrains.
Okay.
Here's why I'm super negative on the idea. Tesla is going to be constrained by the powertrain. They're not going to be constrained by their ability to make the shell that goes around the powertrain. So why would they sell that powertrain that they're constrained on to another company that transaction alone adds cost to the final vehicle? That's completely against Tesla's mission. They want to lower costs, increase volume. Why would they add that step that's going to add cost
For another vehicle
when they're
company,
supply
though?
constrained? Yeah, so like I'm Tesla, I sell like Toyota my
Yeah,
powertrain.
but we're still getting Toyota powertrain that's way better for half the price of what they're getting from
Why not
whoever
just
else.
throw that into a Tesla vehicle?
Because we're going to license them the tech and we're not going to put up any of the capex. And so we're not even going to build it for them. They're going to build it themselves. We're just going to help them build it and get super paid
So it's
for
like
it.
a
That's
CapEx
why
move.
it's a pull forward of the entire financial
not gonna
statement of like,
trust-
should we build Gigafactory 6 to 10 or
Yes.
should Gigafactory 6 to 10 be built by everyone else? And we're going to already start building Gigafactory 11. That's
What have the
capital,
other-
the cash flow math is serious there because
That's
you're like,
true,
well,
and
we don't
that's-
put up that 20 billion in capex. They do, but we get paid basically 80% of that gross profit value from each of those vehicles. that rolls
What
off
have the
line.
other automakers done to date to trust them with that though? Like if I'm Tesla, I'm not going to.
Yeah, you're right. Fuck Fiat. We should license it to Apple,
I mean,
Amazon.
the licensing of the technology makes sense, but Tesla moves so quickly that the technology doesn't stay the same. So like, I'm not going to let someone else build a gigafactory and like assume that they're going to be able to like keep up with me. Tesla's continued over time to just become more and more and more vertically integrated. So even the licensing thing, there is some merit to that. Like I was thinking more of like supplier, like Tesla would produce it and then like sell it off. That I don't think will ever happen because it just adds that extra cost. And then you're also like, it just adds the cost, and it doesn't make sense for the final consumer because Tesla's going to be powertrain constrained. So like, just put that in your own vehicle.
and it's like an MBA answer. I'm arguing for it, but it's also like a finance bro MBA thing of like license it out. The math works better on my Excel
like
spreadsheet, but it's like it
diversification.
doesn't actually really work that way. And there's so many more complications.
So many more, which are underappreciated. So I'm very negative on that for that idea, but the licensing aspect is kind of interesting.
Anything else you want to cover? Because I know we're out of time, Tesla wise. Before we get to the beard oil question, which was the most requested on Twitter. Thank you all for that.
Weirdly, the most requested. Let's hop into that.
Okay, so we both have beards. Your beard maintenance game.
Yeah.
What,
So
how are you maintaining that?
here's my process. Shampoo when I
On the beard.
when I shower. shampoo here,
Okay.
back here, and on the beard. And then I rinse that out. And then I condition, up here,
Can we get
on the sides.
there could be a brand
And
plug.
then
We might get sponsored. Who's your brand?
I've been rotating. A couple years ago, it was Suave.
So you do need to sponsor.
Most recently, it was Dove. The third is the little tiny green bottle with a gold cap. I don't know. We'll find the picture of it.
Yeah, we'll find that.
I'll just send you the picture from my shower.
With you in it.
I will not be in the photo. We'll get like a thumbs up in there, maybe. So I condition, and then I wash the top half of my body while the conditioner is in, and that allows it, I feel, to do its full job
To condition.
conditioning.
Yeah.
And I rinse it all out, and that's pretty much the shower portion.
Okay.
Then after I'm out of the shower and dry off and stuff, I will trim it up. So
Clean. It looks very clean in person.
Clean lines.
Like,
I didn't even shave
It's one of those
today.
things where like you see Rob in person and you're like, this is a celebrity. Like he's just so clean cut.
I get
Like
that
it's
a
just
lot.
so crispy. Like
They're like, I don't know what celebrity you are, but
like, where do I
are
recognize
you
you
a
from?
celebrity? No, that's never happened to me. So I trim it up, trim the neck beard. You got to trim the neck beard,
Bro,
Like otherwise it goes down to
key,
like
bro.
here, and it's not a good look for me personally. So I'll trim it up, and then I'll do some beard oil, which is also the purpose of that is to keep it soft, and I like my beard to be soft,
okay.
touchable.
I'm gonna trust you on that. I'm not gonna Wow. I mean, I don't think we even have time for my beard routine. I'm gonna save that for our next podcast.
Isn't
So
your beard
that's
routine
it.
like pretty short though?
I don't have what I'm not We're closing it
Sorry, I
down.
called you out. That's
Anyway.
all right.
Thank you so much for tuning in.
Support Galley on Patreon.
Patreon and YouTube. Honestly, you guys are
Yes.
supporting by watching, but huge shout out to the Tesla community. You guys give us awesome questions. Go check out Rob's new YouTube channel. If you haven't subscribed already, definitely check it out. He's got beard oil tips videos coming
That's all it
soon.
is.
So yeah. Anyway,
Rebranding to Beard Oil Daily.
thank you for coming on the show,
Thanks,
Rob.
Gally.
Appreciate it.
Absolutely.
Peace out, guys.